What's up, guys? Today's the 6th of April 2025. For you guys, this is being recorded on the 5th of April, if I'm not mistaken. What you're looking at on the screen here is Wednesday's price action. I believe this was the day of the high impact news driver. I think it was FOMC day. So I was just trying to throw myself in this environment again. Novice traders really aren't supposed to trade on days like this, but the way I see it is I can only really identify what the problems are going to be if I throw myself into the shark infested waters. So here it's pre-open. I'm because I was trying to practice being in a position before the opening bell, which is pretty hard because the New York opening bell is really volatile, so the markets behave differently. So like Asia it's a communist country, so the market's really flat. It's really not really volatile. It's just kind of just goes sideways, which is good, I guess, for a stable economy, but it's bad for volatility. No, not a lot of people like trading Asia, and because it's really slow. You need a lot of patience to trade it, and it's just, you can get a lot more if you know what you're doing out of the New York Stock Exchange, but you can also get burned really, really bad if you don't know what you're doing. And here, so my trade idea is price is going to go up at opening bell, because it's, as you can see on the right portion of the screen, we have the 15-minute, or is that the 5-minute? Either the 15-minute or the 5-minute. I think it's the 15-minute. But you can see it sweeps liquidity. See, so it price dips below some of those relative equal lows, so that's a liquidity sweep, but then it fails to do it going up. So then it creates nice relative equal highs because it failed to take out the liquidity. And I'm using the new day opening. It's either a new day or I think it's a new week opening gap as a catalyst to send price up, because as you can see, the bodies are stopping dead in its tracks at the quarter, like at the quarter mark, the upper half. You'll see in the video that that's not necessarily the catalyst that sends price up. You'll see what I'm talking about here in a second. But up here we have Tuesday's first presented fair value gap. We have a new day opening gap. We have relative equal highs. Prices in trading right now at this current moment is trading in the upper quadrant of the new week opening gap. So there's a lot of things telling us, there's also, but here price is kind of split halfway. You see, if you look at the right hand side of the screen, it didn't take out the liquidity on both sides. So there's now relative equal lows. If you see on the 15-minute chart, you can see there's like those lows there, like the low most to the right doesn't take out the low farthest to the left, so that's relative equal lows. And then same thing for the top. Well, that was the 5-minute, so now I think I'm going to jump into a 15-minute. Yeah, and see okay, so this kind of depicts it really more simple into those 4 little candles at the end there. I'm just looking for where the liquidity is at. And right now, I'm kind of like, damn, there is liquidity that kind of needs to be taken. Both sides kind of got rated, so it's when prices like that, it's hard to navigate. And I mean, that's been the whole entire kind of trend since the tariffs have came into place. Like, price is really difficult to predict right now. But as you can see, the catalyst that sent price that huge move down was that big orange box there. Hopefully I go back to it, pan back to it. Okay, so that big orange box is a 4-hour sell side imbalance, buy side inefficiency, which by trait sends price down. And as you can see, it hit the consequent encroachment. Well, I'm not zooming into it now, but if I zoom out, I think I'm trying to delete old new day opening gaps, but you'll see what I'm talking about here in a second. Well, that was probably really loud for you guys. But yeah, 30-minute video. It's kind of long. It does kind of take a while to pan out. I do take a lot of heat. I take a lot of heat in this trade. It turned out well, but it very well could have turned out bad. So not really a habit I want to build. In this trade here, you'll see what I'm talking about, because I moved my stop loss down. Not a habit that I want to have. I think what I can learn from this video or this trading session in particular is that you should never put your stop loss on the low or the high of anything, because it's just such a magnet. It's not price isn't always going to hit the high or low of a new week opening gap, but it is a possibility for it to strike the low of a gap and then move forward. So here I have my stop loss at a low of a new week opening gap, and you see here I start getting uncomfortable as it trades below that quarter mark of the new week opening gap, but I'm still just waiting for the open. I can't see what time it is here. I think it's I wish I would have panned out on the 15 minutes so I could show you guys that 4 hour sell side imbalance, buy side efficiency, and how it hits the consequent encroachment and then falls out of bed. That was pretty interesting for me to see. Those higher time frame inefficiencies have such an influence on price. Oh shoot, I need to plug my freaking charger in. I still find it so crazy that shit. Still find it so crazy that some people, see, I pan out here and you can see it hits the consequent encroachment of the 4 hour sell side imbalance efficiency, and then it falls right back down. Which obviously that's a pretty good indication of bearish price. However, I don't know why. I mean, I know why, because price had fallen down so much and taking a lot of sell side that I just felt like, and there was a lot of new day opening gaps up there, trying to pull price up to it, that I felt like I was pretty convinced price was going to go up in the open during the opening bell. But yeah, I'm taking a lot of heat right now. I think I'm down. I got in a shitty price. I should have waited for price to go down into a deeper discount. I was really premature here. As you can see, that sell side imbalance, buy side efficiency on the 1 minute continues to send price down because it's a breakaway from the high. See how price was kind of like stuck at the high of that new week opening gap? It was kind of like then it breaks away and forms an inefficiency, and that inefficiency is a valid one because it's a breakaway inefficiency, and as you can see, it barely touches it and then runs away. So it gives you one opportunity really to be a part of that run, and then it goes away. I don't think it refers to it again. But now I'm like, okay, I can see here that price wants to go lower and it's reaching for a discount, and in my mind the discount is the low of the new week opening gap. So I feel like right now I'm already forming that idea, and I also don't want to, I don't know how many contracts I'm in right now. I want to say 2, but I think it's 2. It might be 3. I think I load up too many contracts on here. That was stupid too. I also don't want to build that mindset of like being so convinced that I just like leverage more, put more contracts on the line. It's just a bad habit. That's greed. That's like my greed talking, you know, that's like my greed talking to me pretty much, like, hey, like, just because you feel like price is going to go up doesn't mean that's like betting more, you know, that's just gambling. And you really see, when you start to trade more and more, you see a lot of your like personality traits come out, the ones that you didn't really know about before. Kind of interesting. But it's good because it means that once you like know the problem, you can work on the problem. But yeah, right now I'm like hoping that price can get above that sell sign imbalance, buy sign deficiency, and use it as a catalyst to send price higher. See there, I'm kind of looking at it real close. If it can close above the consequent encroachment and then trade above it, then that would have made me happy there, but that's not the case. I take a lot more heat on this trade than I would have liked, for sure. I was being real stubborn with my trade idea, which is bad. I should have not done that, because I took a lot of heat, I took a lot of risk unnecessarily. I could have just got out now and got back into the trade when I was at the discount, you know, the discount that it was going for. Still, not a bad trade idea, just very poor execution on this day specifically. And it was just really volatile. I mean, look how much handles it dropped from in just an hour. Like, that's a lot of handles. And then here I buy again, which is later on. I'll see that was a mistake. I think, what was I even thinking here? What was I thinking? Maybe I was thinking that it failed to get to the halfway mark, and so I was like, oh, well, that's the discount. That's what that's what it's going for. But that turns out not to be the case. Here, you see how the bodies like just really reject that. Like, it wicks up there, you know, it does damage up there for people who are short. It wicks some people out, but see how the body just refuses to get it, like, really dig into that inefficiency. That's like a telltale sign right there. I mean, what else do you really need to see than that to know that price does not really want to go up? Yeah, this trade does take a long time to pan out, literally like the whole 30 minutes, I think. So unfortunately, it's kind of boring just looking at me in red. That's the reality, though. You're gonna have to take some heat when your entry sucks. You will take heat 100%, and by heat I mean like you're fucking like you're floating negative. Like your P&L is floating negative, which is, I mean, obviously an uncomfortable. Here I'm trying to find every rhyme and reason to justify justify price going higher, but I'm getting denied every single time. See that reaction? See how the bodies are staying trading on the lower portion of the fair value gap? A telltale sign that I'm cooked. But you'll see how it pans out here shortly. This is actually a pretty good video. You'll see my PD raise, not my PD raise, but ICT's PD raise and how they work. I mean, you've already seen it with this PD right here. I can't even imagine people who trade without these PD rates. Like, how do you even trade without this? Like, how do you even know? Like, I guess, I mean, trend. I understand indicators and how they tell you when to sell or buy, and I guess kind of like how they work, and they're trend following indicators, right? So, but like, how do you know, like, on a day like this, and like you want to hold on, and then that big green bar will tell you it's time to buy, and then it just kind of falls out again. I don't know. I just don't like the idea of that. If I'm putting money on the table, I want to know where it's gonna go and why, or have at least a good idea. At least have some advantage on my side. If I wanted to gamble, I could just go down to the casino and put some money on black, but that's not the goal here. And a lot of people who are watching this right now are like, dang, like this is a really bad losing trade. And I mean, they wouldn't be completely wrong, but you'll see what happens. For some prop firms, this would have been you would have been done trading. For some prop firms, even the floating P&L, even if it's not unrealized profit and loss, they count that. So if I was unrealized $2,000 and that's the limit, then I would have been stopped trading for the day. But other prop firms only their rules only revolve around realized profit and loss. So it doesn't matter if you have floating $4,000, $5,000 in loss, as long as you don't realize more than $2,000 of loss. So definitely gonna get into prop firm trading when I get back home. And here, I know my stop loss will get hit because it's going for the bottom of that new week opening gap. I can kind of see that now. I mean, price is really bearish. See the PD array that I outlined there, the sell sign imbalance, buy sign efficiency. Yeah, it gives you 3-4 opportunities to get in, and then it falls out of bed. Pretty nice there. I could have been on both sides of this trade if I really wanted to. I don't know. It's hard to change your trade idea. So now I'm cooked. Here I need to make a decision. Either move my stop or close out the trade. And you'll see here that I close out the trade because it's clear that's trading to a discount. At least I should be closing out of a trade. Or moving my stop. You should move your stop now. I don't know why I waited so long to move my stop. That's pretty dangerous actually. I think because I was trying not to, because I don't like to. It's not a good habit to move your stop, because if you get into a habit of moving your stop, you're going to go ahead and move it higher and higher and higher, and if price keeps going higher and higher and higher, you're going to lose more and more and more. So it's not really a good habit. The better habit to learn is learning good places to put your stop loss, like I said in the beginning of the video, not putting it on lows or highs of any PD arrays, because price is going to refer to it pretty often. So it's a lesson learned here. I don't know, I just keep on learning. I haven't had really good quality study time though. I don't know, I don't really want to watch more videos because it's just cramming my head with more shit that I don't really need. I feel like I already have a baseline of what I need. I need to know where liquidity is. I need to outline the relevant PD arrays. I need to watch and get in sync with price as it's referring to these PD arrays. That's kind of how simple it is, but I guess watching the videos is good because he goes over a lot of psychological trading stuff, which is something that obviously I'm lacking because I'm a novice trader. So I should probably keep watching them for that reason. But as far as learning more tools to use, more things to add, that was a crazy move. I was honestly shocked. When I did that, I was hard on myself. I was like, fuck, that's a real not a very good thing to do in trading. But when price wicks into the new week opening gap below, I'm then reassured that it's going for a discount. And if I'm smart, I would have bought here when it hits the new week opening gap low. I'm not sure if I did or not. Don't remember. It's Sunday now, and this is Wednesday night for me. But yeah, that's that. Oh, does it not hit the new week opening gap? Well, I could have sworn it did. I guess it doesn't though. It might though. It may very well may. it's about to be opening bell in like 2 minutes here, so I'm just watching price, just chilling. I could have sworn it hit the new week opening gap low, but maybe it doesn't. I don't know. It's also good, like if it hits it and wicks it, that's good, and if also fails to hit it, that's good, right? Depending on which direction you're going to. But I think it's kind of better when it hits it, wicks it, and moves away quickly, because that's like how you know it just wicked it. You know, like it's just going for the discount and it's moving away quickly. But here I have so much risk on the line. It's actually wild. I've never had that much risk on the line, and it was kind of stupid, but you'll see it works out in my favor this time, but definitely not something that I want to continue to do. What I want to get better at is just picking better stop losses. That would be a much better option than just having all this risk here. See how, and then price is going to go lower because that green tall wick there right to the left of that candle that's forming right now. You see how it fails to reach the midpoint of that wick? It's a good indication that price wants to just go lower, either for the long term or just for the short term. And then here, I like this reaction here. I should have bought there. That would have been a really, really good place to buy, put in a contract, because I bought really expensive, as you can see. Not super terrible prices, but really could have got better pricing. I think I put another contract here. See how, you can't deny that that's precision. That's like, where can you, like, who else is, like, where else can you see that except for ICT concepts? I don't know. I've seen a lot of trend traders, zone traders, zone traders, breakout artists, like breakout traders. I haven't seen anything that meets the precision and the timing of these PD rays that I've learned. It's just, I don't know. It's really cool to see though. 22 minutes in the video, though. Probably no one watches that much of the video, but still good to see for myself. And it trades to it again, wicks into it again. Isn't that interesting? Then it kind of pushes away. Now after this, I think we're in the open now. I want to see big candles up, like move away like a lot. That would make me feel more comfortable. See, I would have been stopped out if I had my stop there, 100%. I didn't have to move as much as I did, but I was just like, I'm not going to let this stop me out because I know price is going to go up, which is risky. See how it just lays it slices it that PD rate like butter. You should add here, yes, but I don't think I do. I think I already have 3 contracts on. See how it slices those PD rays like you just like, oh, that would be a good place to buy. And I do. Interesting. It's not 4 contracts deep, I think, which is pretty wild. When I first start trading with real money, it'll probably be 1 contract. Unless I get real comfortable trading with multiple contracts, I don't know, we'll see how it goes. Because 1 contract is just hard to like really take positions off, like take money while you're going up. I don't know, we'll see though. And then here, a lot of traders will probably be like, fuck, why did I buy another contract there? And actually that would have been a good place to buy right there as well, because it's dipping back into that PD ray for more discounted prices. And then you'll see the reaction of the body. So the body candle will tell a story, but the wick will do the damage. So you see the body stays above the PD array, which assures me again, no, you have nothing to worry about. Price still wants to go up, and it's the open, and it's an inject of volatility is what it is the New York Open. And yeah, you'll see here it goes for a ride for sure, for sure. I don't even have a take profit on right now. Definitely should. I don't know what I was doing this night. Oh, I do have a take profit. It's all the way up there. I lower it. Yeah, I definitely lower it. The price actually does end up going up there, but I thought that was way too high. And it's just unnecessarily high. You don't need that much, you know. That's just because that's just greedy, and the more greedy you are, the more likely you are to get cooked. So here, I could have just left the $5,000 on the whole line, and I should have minimized my risk here big time, but I didn't. So I kind of fucked up there. I should start shaving off contracts as it hits these PD arrays. Okay, I move it back up for some reason, and then I should shave something off. If not, then I made a mistake because it hit the new day opening gap. Okay, take one off. Okay, do it. Sometimes I get pissed watching this because I'm just so hesitant sometimes when you're in a trade. Okay, you should minimize your risk now. Now it's traded through the new day opening gap to the top of it. So these are all really good things to see. The trade ends fairly quickly after the open. I take off all the positions pretty quickly. I should take another one once it hits the top of that PD array. But I don't. Interesting. Okay, there we go. I take another contract off as it. Okay, maybe I take 2 contracts off. Wow. I mean, that's pretty good too. I don't remember doing that. And then here, since I took most of the positions off, I should move my stop, and I do. Alright. Okay, yeah, just move to break even. I may get stopped out in the last contract. I don't remember. I think from here, yes, I do the 75 rule. So I go from where my market order is at, and then once I hit 75, I think I take the last position off. And that's, you know, how do you that's a good way to mitigate risk. How to take your profits, even if it runs, you know, way past what you had outlined. It doesn't matter. You gotta follow your rules at some point, and then you gotta build on those habits that you build. And there, I'm completely out of the trade, and I turned, I mean, since I had a lot, I didn't even have a lot of leverage. I mean, a lot of people trade with more leverage than that, but yeah, it's just. And the price continues to soar. It goes pretty high. I think it goes into that orange zone right there. So I mean, you could sit and be like, damn, I wish I held on for the rest of that, or you can be happy that you followed your rules and you mitigated risk and your trade idea is right. Or it's our perspective. You can either be negative about it or positive about it. At the end of the day, being negative about it isn't really going to get you anywhere besides just being lame, I guess. But yeah, that's it. And then you see it hits that other PD array, reacts off it. I mean, this stuff is pretty gold. I mean, I'm surprised I was able to learn this so fast and to be able to have it outlined and see how price is going, how price is reacting and why it's going somewhere, and not just looking at a blank screen and wondering why the fuck it's doing that. Kind of get the know, and now I just need to get more rips at the timing and the execution and the psychological part of it, and it'll all come in time. Give it a year or two before I'm really walking this thing on a leash. Kind of already feels like I have a decent grasp on it. It's, you know, myself that holds me back when I do fuck up. But yeah, that's it for this video. See you guys later. Peace.